Alrighty, guys. Welcome back to another video. We're playing on Plus again. It's a good thing we left trade when we did, because we probably we left right here, and we could have it did hit our take profit. We actually hit our third take profit right here. We could have potentially gathered this, but I'm looking at this leg up here. That would have hurt had we have chose to wait. So I'm gonna take it upon myself to say I did an okay job at leaving when I did. It wasn't my best, but it wasn't my worst. We managed to get back some of the money, some of the pennies we lost. I lost. So, no biggie, no biggie. Today is going to be a little bit more rocky. We have 3 red folders, 1 orange folder, and just so we're on the same page. We have Fed Chair Powell speaks at 9:30, and at 10 a.m. we have PMI, Schultz job openings, and ISM factory pricings, right? That's our news for today. Nothing saying we can't trade. We're going to have high volatility. We cannot trade tomorrow. We have non-farm. We can't trade Thursday. More non-farm. And of course, July 4th, bank holiday. Can't do anything with that. So, no biggie on those. But today, we're going to try and take a trade. We're going to look for the best opportunity that we can. Knowing that the price is going to be moving all over the place between 9:30 and 10. I'm going to be looking more towards 9:50, maybe 10:10 after news hits, to really dial in the best entry point. And from this, we should have a decent entry point we can really get after. Alright, we have an hour here. Throw all of this away. Out there, good. Do this, this. $18.3, and then I want to go down to the 30-minute. 8:30. 9:30. Oh, hello, sorry. 9:30. Not that. This. 9:50. 10:10. That's our range. 8:30 is pre-market, 9:30 is market open, 9:50 and 10:10 are prime time. Take a look for trades. We know news is going to hit at 9:30. We also know news is going to hit at 10. So these 2 candles in particular are going to be the bigger moves. It just depends on what exactly is going to happen. We've been in dumps recently for NASDAQ. Same story-ish for that. For the most part, we've actually been consolidating right here. But that's okay. I need to get a daily bias going here soon. I'll figure that out here soon. $50, 10. Go back up to the 30. So way to flip in here. That's our most recent high. That's Asia session high, sorry. The lowest point, that's pre-market. Down up. Right there. And London session highs right here. And we're gonna mark this high right here. Just to really keep that range rattle on it. There's our highs and lows for Asian and London session. We have outside of that session, that right there. We have outside of the session, this right here. Real range, potential take profit, on the S&P. Same story here. High there. We have a low. That one's lower. Oh, I didn't mark that on that. Oops. Wait, no. 830 is pre-market. Why did I mark 8 on the other? Hang on. I made a bit of a mistake. So this would actually be Asian session, or London session. Oh, if that continues back up. I'm going to get rid of this because that candle falls directly on London session open. But that's not a high on NASDAQ, so I don't think I'm allowed to count that. Because this is a straight line up. This is not. So I don't want to count this. I'll count this instead. 1, 2, 3. There's a range within sessions. Range within sessions. Take profit potential. Take profit potential. There. There's our range. Let's go ahead and hit up. Same story here. Get some chart work going because I don't really want to put any of key levels over there. I'd like to instead do my chart work on this. Zoom that way to flip out. $10, 950, market open, pre-market open, that's good. I'm gonna bring this back up to the hour so we can set it here. Good. Lowest point at the moment is that. That's gonna change here in a second. 30-minute is where I need to be. We have a high. Same story here. We have an up down high right there, but if we go to the NASDAQ, it's a straight line up on the 30-minute specifically. Go ahead and mark that out right now so that way it's a clear picture. $30, 5, there, this, 50, 10, good, bring it back up to 30, maybe flip back in, like this, that's Asian session high, good. Right now that is about to be London session low because that's about to shoot way down. We have same story here, so the charts match. I'm counting this one and not this one for the high. That's our London session highs and lows. Take this, take profit 1, take profit 1, potentially. That's about to go way down. Let's go ahead and take a look over here, make sure. We haven't seen this move much at all. I'm going to continue to count this one until we see a green candle on pre-market. If we see a green candle on pre-market, I have no problem counting this as a low. But for right now, I want to wait for that to occur. News is supposed to hit 8:30. 9:30. Huh. Okay. Alright. Let's take a look at exactly what we're after. Occurs. So obviously, from the get-go, we had order block. We didn't get a break of structure from this order block, but we did get a break of structure off of this because we broke past this low, so we were in a downtrend. We broke structure, went up. We have not broke structure since. Did we break structure off of this? No, we have not. We have not broke structure off of that because that would be the low. Still an uptrend. Boom. Have we broke structure off of it? No. So right here. Boom. Have we broke structure off of that? That's the low. We're potentially about to break structure back to the downside, but at the same time, I'm looking at this because this was a liquidity sweep. We have retrace, move up, so break or block here, sign of continuation. If we do not break structure on this continuation again, we'll see it move continuously higher. But if we get a break of structure off of this, it'll be an order block from this point right here. That order block will then translate into either a continuation up, or if we get a break of structure, meaning this right here closes below, which, as we can see, it very well might. Yeah, yay! If this breaks structure the way this is supposed to, the way it looks like it's going to, we might be in for a fair value gap that'll form. That in itself is a sign of continuation. That price is actually going to continue moving down, which works for us. Let's go ahead and get our daily bias going so that way we are on the same page. We have potentially 3 levels of take profit within this right here. I'll mark them out later. For now, let's go ahead and move up to the daily, see what's happening. This is on my price action. Each one of these candles represents a day. Same story as before. We broke structure on this candle here because we have a high and it was closed above, moving higher. We're in a small retrace up here. I called it. We were due for a retrace within this. We're retracing now on the daily. On the 4-hour, same story, but with a potential break of structure happening here. If this breaks structure, it won't have an impact on the day, but we will be seeing a serious move from this break of structure later on. So something tells me after Wednesday, Thursday, and of course the holiday, next Monday we're going to be seeing a major move, either down to claim this liquidity or back up to continue the trend. Depends on what happens Wednesday and Thursday. Moving to the hour. Same story as what we marked out before. Break of structure happening there. We have 37 minutes for this to close. This is a strong point of liquidity, so I'm going to go ahead and mark it just as default. Same story here. We're going to mark that. Are these different? No, they are not. That's the same level. Super strong draw on liquidity right there. So I'll make sure that's good. Same story as last time. We have an order block here. This is a strong draw on liquidity. This actually came down to claim the order block, so I'm not really entirely worried about marking the order block. This is a fairly close zone to that. We have this mode right here that we can look at, and I get this could be considered a breaker block. Yeah, that's a breaker block there that we could fill. For funsies, because this is a potential that we could hit. There's our setup for this. This was filled with this move down, but because this is such a strong draw on liquidity, and this is a fairly, like, from this point down, this is a stretch, sure, but from here to here is not too much of a stretch. So this is going to be my first take profit zone if we're taking shorts. My bias for the day, because of the 4 hour, we'll have broke structure on the hour. We're about to break structure on the 4 hour. Okay, so my bias is we're looking for shorts. Because if we break structure on the 4 hour and the 1 hour, that's going to lead up to a major move down. That's okay. Same story here. We have breaker block that coming down to fill. There. We also have this right here that it could fill. Though it already was, it's still a decent move there. From comparing the two charts, this does not look like a stretch to me. This looks like a stretch to me. Though, because we've broken structure now on both of those, I feel as though we will have that occur. It's just a matter of time before that really starts moving down. Because this did not break structure, this could be considered the breaker block for this move specifically. Saying price would continue up and out of the 30-minute break of structure here. That'd be the case. You have 33 minutes for that to close. Let me see what this says. We didn't break structure on this candle. We don't know what this candle's going to do. We have 3 minutes off of that. Do we have news up right now? Nope. I don't know what this is. It's sweeping up these lows, though. All of this. Regardless, I think it's actually filling this order block right here. Here down to here. Filling up that order block. block. Oh, oops. That's good there. Cool. So we have an order block, massive one, breaker block, which is a little bit smaller. We should be seeing this hit this here in a second. We do have a line here. We don't have a line there, but we do have the bottom of this line here that we're after. We get a valid breaker structure and a fair value gap. That'll continue down, but I do also believe that we're going to see a retrace back up. How big of a retrace is going to be highly dependent. So I think for this break of structure, news is probably going to be a retrace. Either that or it's actively going to be a much more firm line down. At which point, my bias is going to change because we'll have broke structure back to the upside. Though that is a massive move down. We should be seeing a lot of stuff occur. Okay, let me go ahead and remove this so that way we can see stuff. Breaker block. That's the thing. I'll move this up here because that doesn't make sense. This right here does not make sense. This is the bottom of the order block. This is the bottom of the breaker block. This right here is the bottom of another order block that pushes even higher. And then this right here. No, because that's the bottom of the breaker block, so that makes sense. Okay. And then yeah, do the same thing on both of those. Okay, that works. We're gonna do that. We're gonna move up to the hour so we can see stuff. We have 30 minutes for this candle right here to close, or actually for this candle right here to close. So this could continue to move up, as we could see. It's leaving a giant snail trail, which works for us. If we do not break structure, we'll have to wait and see what news brings us. Just keep that simple, effective, out the way. Alright, from here we'll move to the 30 on both of these. We'll go ahead and mark up the NASDAQ first. Same story here. We had right here we had a breaker block. I think I marked. Oh, I didn't mark it on this. Boom. Then we had breaker block here. Pardon me waking up. It's still relatively early to me. I'd count that if we hadn't swept it already. We've already cleaned up that order block there. Or say order block. That's a breaker block. There's a fair value gap to look at. Meh. We have two fair value gaps right here and right there that we could look forward to. However, I feel as though the take profit from here to here works in that regard. Store there, same store there. I still think right here falls in line with this though and that fair value gap. So I think this right here is a high confluence area because we have an order block, or I'm sorry, a breaker block here that does not break structure until we get to right about here, where we break below this low. We see it fall down, and this whole move can be considered an order block because it is a string of candles that match and force price to go higher, form a breaker block saying continuation, and then move up past this high, creating a liquidity sweep. From this liquidity sweep, we see price continue higher and consolidate from that point on. So this right here is a high area of confluence because we not only have fair value gap, breaker block, but we also have an order block here, a breaker block here that says price is going to continue higher, and it never comes back. It doesn't come back down until like right here and right here ish to really fill anything. And this right here could easily just be said it filled this breaker block here. Because from this, it didn't break structure until right about here after this order block fills within the range of this breaker block, and then it continues higher. So now we're looking at price continuing down. We broke structure in this downtrend, we move up, down. We didn't break structure at all within this. We're still in the downtrend, so that would be our order block. Boom. This would be our breaker block because we tried to move back up. And repeat move. So I'm sorry, that would be our breaker block. This, from all of this, is our breaker block. That would be our order block. This would fall even further, sweeping this low here. And of course, creating a new low per London session for pre-market open. Our key levels, I think, are relatively okay the way they are right here on the bottom. I also want to mark out some high-level liquidity. Starting with this one here, we have breaker block right there because we have order block sweep of this high, and of course from there it continues to back down. It'd be our sign of reversal for that downtrend to take place. Make sure that's well marked. We have that high going for us. That would be an inverse value gap there. We have a breaker block here. Oops. This. That's just the most immediate one to keep things. Okay, it hits this, breaks past, hits this, break past. I'll count this. Just because that is a draw on liquidity. I mean, that is a draw on liquidity. Plain and simple. Ooh, hello, I didn't see that. We also had a breaker block right there. Same story on this node here. Ish with less confluence. We have this high here that's just a super strong draw on liquidity. We have from this move right here. We didn't break structure till this candle, obviously, because that's the low. Because of that, we saw order block, sweep, and this would have been our breaker block here. We have a fair value gap right there, but I'm more interested in this order block. Not this order block, but this here, this move right here. I'm actually... Do we have fair value gap on that? We do, and that actually covers it. The order block, or breaker block does, so we're going to do that. We're going to take this. Yep, okay. That's good there. Good. And then... we have another breaker block right here. No. No, because that covers legitimately all of that. So I don't want to do that just yet. I think our upside liquidity works. Our take profit zones right here actually work out for us. And sell side liquidity, we have same story throughout this. I haven't marked it on this yet. I am making a big oof right now. Big oof. There are 2 draws on liquidity there. We have, of course, a breaker block there that will form, but this again isn't that big of a leap. I don't think I marked it out there either. No, I did. Put that there. That came very close. 12 seconds. That was very, very close to being just hit right there. Crazy stuff. Alright. We've moved on to the next candle. I wonder what it's doing. I moved to the 30 minutes to really get a picture of this because I'd like to see what that one's going to do. I think, is it going to continue down? Did we break structure that badly? We swept past this low, swept past that low. If this candle is a green candle, we'll mark this as the most recent low off of the London session. We'll go ahead and get rid of this right here because it's already null and void. We've already broke past it. From there, we'll have, of course, the same levels of take profit throughout this. Of course, we'll have take profits throughout this as well. We got to remember there's about a 20-minute delay from trade locker to trading view, so I'm not going to imagine it's going to go my way when it comes to looking at that chart. The primary reason I'm doing chart work on trading view is because it looks a lot cleaner than this does, and I'd rather have you guys be able to see stuff more clearly, what's going on here. You can make your own guesses as to what market's going to want to do. That being the case, I'm just going to let that do its thing while I'm continuously marking this up. I can still see price here. It's just extremely delayed. So we'll wait and see what that happens there. Yeah. Being the case. Yeah, key level there. Did I mark? To bridge the gap, I think I marked with this. Did I not on that? I did not. What about this one? So I did, and I bridged this gap because I thought that right there would have been counted. So how about this? To bridge the gap and make more of a potential, because that might not get hit, but this very well might, right? This is a potential, but my first take profit, because we broke past this right here, is potentially going to be this. and then 2, and then 3. Right? That's not too bad. That's a leap. Because I'm curious to see what would happen. Same story here. Okay, there. And that's a little bit more of a leap, though we've already kind of touched on it. Not too crazy. Get grief, go away with the ads. I have zero interest in buying anything at the moment outside of this. We have not broke structure at all throughout this. I mean, from this break right here off of this, we've been in a downtrend, right? We have plenty of take profits down low if it wants to continue. We have take profits up high if it wants to break out of that structure. But to do that, it's going to need to break above that high there, or continue down and then come back up, creating an inverse value gap off of this, and then continue higher. We have 2 levels of respect that it could do. We have from this high to this low that I can respect if it comes up within. I'm gonna do this because this is a key level that be said. We're gonna change the color of this to, we'll change this to blue just to keep that simple. Here's a blue there, boom. Top of this down to the bottom of this. So the 2 blue zones are a confluence that I have found from a different strategy. Beforehand, it's all about building confluences up to the point of entry and then taking the entry based on a confluence found on the lesser time frame that aligns with the rest of the confluences on a higher time frame, right? To get the best trade, because that's kind of the point, right? This strategy that I'm implementing with the blue ones are specifically someone's strategy that says treat the highest candle and the lowest candle of a trend as though they are their own confluences. And kind of like how equilibrium works, where if the candle is respected, right, it's not closed above, wicked above, or anything like that, that must mean price is going to continue in the direction it's going in. So in a downtrend, this green candle will need to close within the blue zone in order for price to continue down, right? It cannot close above the candle because that would mean we've changed direction in trend. And I'm cross-referencing, just so we're on the same page, so it makes a little bit more sense. I'm cross-referencing that strategy with the strategy from TJR Trades, so that way the end result is, regardless of what that candle does, we'll see on both strategies the disrespect of the candle, the break of structure, and an inverse for value gap off of a candle like what we're seeing right now that will not only check 1, 2, and 3 boxes, but tell us, hey, the bias was wrong, consider the other direction. Because the end result is going to be not what you thought it was in the beginning. This way, we have essentially what we're after. A bias that we know has been disproven, and a new bias says, pay attention to me. I'd really like to see this candle that's currently forming close, so we can go ahead and mark out that low as the new draw on liquidity for the low side. I feel as though because we've already swept some liquidity that is going to want to continue higher. So I'm fully expecting at the moment that move up as well as news to disrespect the previous high. This one here specifically, right? I want to see with my own two eyes what that's going to do. And in order to do that, we need to be patient and wait also very carefully with that. I'd like to also see price continue in the direction it is, because if we manage to continuously move down, that gives me more hope that price is going to try and move down here, potentially move down here, because we also have a fair value gap, right? That it can hit. We have two fair value gaps. Technically, it hit one already, but we have this one here. We have this one here. We also have a super strong draw on liquidity way down here that I'd like to see get hit. We also have this one down here. I'm not looking for this one because that is a massive leap, but that is a seriously strong draw on liquidity right there that I could potentially hit. And of course we have on the daily all of this liquidity. Like, I'm pretty sure 1, 2, 3, and maybe 4 down here. Oh no, that right there. This right here is a super strong confluence area. So it could be targeting all of that. We could be seeing a massive trend reversal on the NASDAQ and the S&P. It's just a matter of waiting and seeing. Is it the same story right here? Kinda. Not as strong. This is still super strong. This is insane way down there. But yeah, that's what we're waiting on right now. NASDAQ is painting more of a clearer picture as to what candles are going to want to do. Kinda. Sorta, kinda. And again, live action trading is also painting a better picture. I'm going to pause the video now until we can get a confluence going, and of course I'm going to wait until market opens before I really do anything, because we know news is going to hit like crazy from 9:30 to 10. It's just a matter of waiting and seeing exactly what news is going to do and when it hits. We really want to see price do its run up and then figure itself out for the day, and I know news is going to be the defining factor in today's ability to take a trade. So I'm going to go ahead and pause the video. I think I've done my due diligence, right? I'm going to do all that I can to really get this trade honed in. My current bias is that we're in a downtrend for the hour. We're in a downtrend for the 4 hour. We are not in a downtrend for the daily. Expect a reversal to continue the uptrend on the daily, but otherwise, unless the chart says so, for a break of structure, an inverse for value gap, for the 1 hour and the 4 hour, consider us in a downtrend and thus look for shorts. That is my current bias. In the event we do not see that bias fulfilled and a reversal come about, that will be our defining factor. We are no longer looking for shorts. Instead, we are looking for longs. And it'll continue in a long, or we will not be taking trades. From that point forward, we have our bias and the exception to that bias. I'm going to pause the video now. Let's see what happens. Okay, so it's 9:30. Now, we have market open. As you can see, we're moving up on both NASDAQ, well, on the S&P. NASDAQ, it's taking a minute to load. Every time I swap between these two, things go crazy. News should have hit by now. It's 9:30, as you can see. Boom, we had Fed Chair Powell speak. 100 folder down, 2 to go. Long side and orange. Gosh. If I had to guess, I'm going to say this was the run-up. No, because I think that's what we did last time. We assumed this was the run-up, and as a result of us thinking this was the run-up, and us thinking price is going to go higher yesterday, we took a buy position, or whatever it was, and got stopped out from the reversal back down from the continuation. Right now, we are in a downtrend. That bias has not changed. We have not broke structure. Sure, we're about to have an inverse for value gap right now. If that right there closes above that. The inverse for value gap is not my concern. My concern is the break of structure there. If we do not get a break of structure between these two right here, I am more than likely going to be taking a trade for a short. Wonder, because this is a 10-minute delay. For the sessions, this would have moved further down, because that would have been a new low made. I should have done this earlier. Why I didn't. This was the low. That's the new one. We don't care about this one. Did it? Oh, dog. I counted that. So we have a small SMT divergence right here. I believe this is on the hour that that's occurred on. Yeah, this moved up where this moved down. We swept out this on the NASDAQ, but the S&P is saying we have not, which is still, this is still a potential point for liquidity to get to. We're still in a downtrend. That has not changed. I think I want to do this. Yeah, I'm gonna do this. So we're on the same page, right? This is what's going to happen. We're gonna do the same thing there. Did I put one for in the middle? I put one on either side. I made that thing. I took this as a key level. Kept those two marked. There was a breaker block here that is not present on that, so I can't count it. Does that look about the same? 1, 2, 1, 2, 1, 2, 1, 2, 2, and then 2. Yep, okay, so these charts look the same now, with the exception of this right here. Got maybe a couple more key levels. We're going to stick with the S&P 500 for right now because it is the one lagging behind the NASDAQ when it comes to the hourly time frame. We want to see a retrace back down and a continuation of this confluence, which would ultimately say that this chart not only is lagging behind, but that it will continue down to sweep out this liquidity here, as well as maybe a couple more down there. It would make a lot more sense for it to respect this zone and then continue down to hit 1, 2, 3, 4, right? Again, my first take profit is going to be set here, and we'll move on and on as time goes on. That being the case, I also want... I mean, that's pretty much it right now. I just want it to continue downward. Looks like we're getting that right now. It's currently 9:30. News just hit. Just like it's been 5 minutes since news hit. And I mean, you could see the movement all the way across this here. I also think we have to wait at least 10 minutes 10 minutes after 9:50 is 10. News begins. The rest of news begins at 10. It'll count down from that 10-minute mark all the way down to 10:10. 10:10 hits, and we have potential to take a trade, but I want to see the move occur, because it's got to be a thing. If I had to guess, I think that's what's going to happen. I think when news hits, we'll have an inverse fair value gap, but not a break of structure, which will, on this chart specifically, respect this blue zone here. Because as soon as it breaks up above that, we'll have one confluence met, key level. This zone will be disrespected, and if it breaks above this breaker block here and breaks structure, closes up above that, that is a reversal sign that we're moving in the opposite direction, up. To spot a continuation down, it would need to close back below this blue marker here, which means it would need to close below this wick in particular. I think what's going to happen is we'll have a inverse for value gap. It'll fill all those orders first, and because it will have filled those orders, it will come back down, close below, and when it closes below, that's when we identify our confluences. We technically got a liquidity sweep on this NASDAQ here, but it's the same story right here. We did not get that much of a liquidity sweep outside of like a couple lows off of this trendline lows. So because this was an order block sweep, I'm looking for the rest of the confluences off of this sweep to occur. So for this to be a thing, we're looking for because the sweep's a sign of reversal, we'd be looking for a break of structure or an inverse value gap or an S&T divergence on the 5-minute. Because I'm wanting to see price continue lower, I'm looking for it to reverse back to the downside, which means it would need to break structure to the downside. Technically, we're in a downtrend. So, it would need to reverse, come back down, close below. If we were to look at this and then go on the 5-minute, I don't really know what we would look for, to be completely honest. Because this was our sweep, right? We broke structure on the 5-minute here. What's that? Or, well, we technically broke structure there. After we broke structure on the 5-minute, we had small fair value gap that occurred on the upside. You know, biggie off that break of structure, off that fair value gap, we would have seen the price continue higher. And this right here, we'll see the 1-minute inverse fair value gap here. We could have entered off of that and watched the price continue higher, but the goal again is to see on the 5-minute, not the 5-minute, but the hour and the 30-minute, this right here not break structure. And then, of course, on the hour, for it to follow suit, that continue on down. We have one high for this not to break up above. For it not to break up above that high will tell me that we're continuing lower, which will fit in with daily bias. Current bias is these 3 nodes here, this being a low. Why is it not? Hot dog. What the heck? I didn't move it, that's why. We swept this, said I don't care. And this became the low. This is our range, our key level. So it would need to come up above this. It can break structure. we'd be looking for the reaction, I think. If we're looking for the upside, we need a reversal confluence, a liquidity sweep, a break of structure to the upside, or fair value gap on the higher time frame saying that price is going to go up. We had a fair value gap going down, which told us price was going to go lower. We also had a liquidity sweep on the downside. Liquidity sweeps are signs of reversal. Market has manipulated price from the past to push price higher. This is okay to understand. However, if from that liquidity sweep we do not get a break of structure immediately after, as a confluence confirming that liquidity sweep, we cannot say and or assume that price is just going to continue higher on the higher time frame. So while we're here on this time frame, we're going to be looking for break of structure. That is my key level. That is what I'm looking for on the high time frame, not the 5 minute, but on the high time frame. We get a break of structure on the high time frame. The trend has then shifted to the upside. I think this is going to be my mistake. This video. Because we identified each of the confluences. This was our sweep. We identified all the confluences. We identified all the confluences through this, saying price might continue higher. But there is one stark factor that is still to be considered. On the higher time frames that hold higher power, the 30 minute, the hour, we have not broke past this high. We have not broke structure on the higher time frame. Knowing this, everything about this move down is saying price is going to continue down, not up. We got a liquidity sweep? Sure, right here. I'm looking at all of this that it would want to claim too, though. NASDAQ may have swept this. NASDAQ might have. But the S&P didn't. It's the lagging index. And NASDAQ at the moment is saying move further down. So, this trend is, in my opinion, I think, going to continue. Because I think it's going to continue down. That is my confluence. Either it breaks structure, and my idea is wrong, it'll continue higher, or this candle will close, 10 o'clock will arrive, we'll see news hit again, and either it breaks structure on news, or we'll see a fair value gap form in the opposite direction back down. Because that fair value gap will have formed, right, we'll see it come and go, and we'll make a decision based off of the 10 o'clock news, because that is where the most impact is going to be. I'm going to wait patiently for news to hit. We have 15 minutes for that to occur. I don't want to make a decision yet, because there is still news on the way. There are 3 folders, 2 red, 1 orange worth of news that we need to make sure is going to happen before we assume anything crazy. Okay? I'm going to go ahead and pause video. We'll be right back. Okay? Okay. I'm gonna do this right quick. Hot dog. Let's see. Let's see what happens. We did not break structure on NASDAQ. S&T. Let's see. We got 9 minutes for that to close. We're at 9:50 right now. This is done. None of this has occurred yet. If that breaks structure, which it already looks like it's about to, right? Not only did we get break of structure, but we also got a key level hit on a high from the London session after market open. So the question becomes, this would be an order block, this would be a sweep of the highs throughout this, because this is a sweep off of a downtrend and a break of structure. Reversal to go higher. My bias has changed from a short to a long. Then again, I also want to understand and make sure of something that we are on the same page about for the video again. My understanding of between 9:30 and 10:10, or more accurately 9:50 and 10:10, is there's a run up and then a switch, right? Market manipulates things around this time and then reverses to the opposite side. So this could be the run up to the switch. This is a liquidity sweep. That's a sign of reversal, saying it'll go higher off of a downtrend. But if this one green candle, being as massive as it is actually the run up, the sweepage of all those highs off of a daily time frame uptrend, which up until now, up until this right here, has been an uptrend, right? We could be seeing a reversal to the downside. It might sweep this, and if it does, when it does, we'll see it reverse, break structure, and then back down it goes. More money off of a short than a long. We want to see it happen. And of course, just so we're on the same page, a break of structure is a closure above a high. We have 6 minutes to go. And this high is what's got to get closed above. If it comes back down and closes below it, we have not broke structure. Meaning, shorts are still on the table. Why shorts are on the table, we have no idea. But shorts are on the table. We have 6 minutes for that to happen. Let's see what NASDAQ is doing right quick, because S&P is going crazy right now. NASDAQ is still saying lower. They have not broke structure. I think NASDAQ at the moment is lagging behind the S&P when it comes to that move. I think NASDAQ is being preemptive on what news has to say. So again, in 6 minutes, we'll see what happens. If NASDAQ follows the S&P, the bias has changed. And again, we need to wait for it to close before we make a well-defined decision, right? In the event we see the charts close in opposition, meaning NASDAQ is still within that downtrend, but the S&P is doing what it's doing right now and closes up above that key level, I am very tempted to say we'll stick with S&P just because it's reacting sooner to news than the NASDAQ is, and because it would be smarter to go with NASDAQ. It would be. However, under the confluences and pretenses that, one, everything is closer together on the S&P, and two, to begin with, we identified an S&T that said the S&P was lagging behind the NASDAQ. that is a confluence in and of itself, in my opinion, to err on the side of caution. Though the S&P is continuing higher and breaking structure to the upside now, beforehand the NASDAQ broke structure and kept sweeping the lows, which means there is room for the S&P to reverse off of a liquidity sweep just like this one, back to the downside to sweep the lows. There is a potential for that to happen. Because there is a potential, we're going to stay on the S&P 500. It's manipulating the highs, is what I'm understanding. Because of that lag behind, I think we're going to see a reversal immediately after this. We had a key level hit, and only one high closed above. Manipulation. Move down, no sweep. Move up, sweep one, reversal down. Still no break of structure. Not even close on NASDAQ. Two minutes, 30 seconds. Same story there. NASDAQ is not breaking structure. I think this is manipulation. Hope you guys are enjoying the video so far. I understand that the last video yesterday wasn't as eventful. It was pretty eventful in my opinion. I learned a lot in that video through the breaks. We sat there for a minute waiting for the price to go our way. We're not going to do that today. I think today is going to be more of a cut and dry trade. We'll see the manipulation occur like it is now, and after that we will look for exit points. And I think we're not really consolidating at the moment. We peaked all the way up there. There is a super strong draw on liquidity up high, but I don't think we're going to be sweeping or hitting that level anytime soon. I think that's going to be the high. Then from there, because we've broke structure to the downside, it makes sense for us to sweep the lows. For market to come down, sweep all the lows, and then ramp up to the high. "13 seconds. Let's see what happens." Is the NASDAQ reacting? Nope. NASDAQ is sleeping. 3, 2, 1. Break of structure on that mode. News just dropped. Let's move to the 30. That was 9:30. Here's 10. So 10. We had 49. Greater. Good for forecast. Good. Greater. Good for forecast. And this is the real setup here. So that's a major move. I've never seen that occur. Greater. Good for forecast. So we should see price moving much higher. News says price is going to move up. How far, we don't know. We just know it's going to move up. NASDAQ's still sleeping. Yeah. But reactively so. This is actually a break off of news. So this is actually moving a lot higher. So I think up is the motion. We have a well-defined break of structure and a key level hit here. Let's move to 5 minutes. See what's happening right quick. So we had liquidity sweep, break of structure on a high time frame, fair value gap, move there. This is the same break on NASDAQ that just occurred. I think this was new. Yeah, this is the news candle that's forming right now. We're gonna let that close first. We're gonna wait for the next candle to form to see what exactly is gonna happen, and then the reaction from news is what we're after. So 10:10 would be the prime time to really look for a trade. That liquidity sweep is fairly easy to spot. I mean, we had the break of structure. We had a fair value gap pointing down. I said price would continue in that break of structure form up. And then on the 1 minute, we got the inverse fair value gap as well as a break of structure there. We could have entered on that said price would have moved higher, right? We didn't enter on that because we had 2 sets of news that were coming out. One at 9:30. That would have been this candle here. That was before. So this right here is news candle 1. From this news, we had break of structure up on the 1 minute. This was what we were counting for the inverse fair value gap on news and 1 minute. I said price was going to continue higher. That's cool. However, we had a second set of news hit at 10, which is this one here. Price may have moved higher, but because this news was about to hit the fan, we want to make sure this is absolutely what we're after. Like, the reaction is there before we enter. We had a key level hit here. This was the high off of London session. One of the highs off of London session. We're going to put that down as a key level just so we're on the same page. Technically, news did hit this key level as well. We didn't sweep, though this whole leg up could be considered a sweep of this high. Because this was a sweep of a high, we could be seeing a reversal here. So now what I'm looking for off of this key level hit is a break of structure back to the downside. So a low that closes below this one. Once it closes below that, my bias is down, because we'll have broke structure on that. The liquidity sweep is the reversal, saying price is going to go lower. actually curious to see. Let's go to this right quick. It disrespected that. It disrespected that. It closed above. That was the break-up structure we were after. Sweep of that. Not the 1 minute, but the 5 right here. Boom. So this key level said that once it's disrespected up here as closed above, that it would continue higher because we respected it. This right here was our breaker block and a high from here that said on the higher time frame if it was broke above breakup structure. This sweep was then confirmed that it would continue higher. Because it's continuing higher, that's the thing. So I was wrong a second ago when I said the bias is lower. We should be seeing continuation of a higher mode. We need to see a break of structure confirming this liquidity sweep. That would be our primary confluence now that we're after. Either a break of structure, inverse for value gap, or an SMT divergence. One of the two. That's higher, that's good. I mean, there is already an SMT divergence. NASDAQ is sleeping on the job right now. Big time sleeping. Is that higher? It is higher. S&P is saying the price is going higher per this right here. From here to here, that's going higher. And then from here to here, that's going lower. NASDAQ is a lagging index in this case. We didn't break structure on the NASDAQ. We, on news, and before news, 9:30 news, we didn't break structure on the NASDAQ. We broke structure here, yes. But we didn't break structure up here on the higher time frame. So, different charts right now. Very, very different. Is the S&P going to continue higher? The S&P is what's going to tell us, not the NASDAQ. I think I want to wait. Technically, the move was already done. I don't care about before, aside from what it's going to tell me about the future. Just so we're on the same page, the breakup structure would need to occur actually right here, because this is a low. Down, up, close point is right there. So if this candle closes below this, that'll be a breakup structure confirming this on the 5 minute. From there, on the same level, we would need to look for a, what's it called? We'd need to look for fair value gap, breaker block, order block, or for price to come back within equilibrium. Either the breaker block gets filled and price continues higher, or we see an order block form, that's a break of structure. If this candle closes, that's a break of structure, confirming that liquidity sweep, which means we should see price continue lower if that closes below. This would be the order block right here. We did. Oh, wait. No, we're still forming that candle. My bad. I think we're seeing a breaker block form, because that's the liquidity sweep. We had a move down, move up, a strong move down. It closed within the range of the move up, making this a breaker block. Breaker blocks are signs of continuation that move higher. From here, we move to the 1 minute. The 1 minute should give us an inverse fair value gap / break structure. The bias is buy. Good. Let's go ahead and do this here. We want to place our stop loss just below this low here. We want to take profit, and we want to drag it all the way up to there. And does this look okay to me? 0.47 to a 0.73. It's not perfect, but it is better than nothing. And that is a super strong drawn liquidity. I think it is going to target, because that is the way it is. We have entered in on a trade that is going to be what we're after. So just to recap what happened, let's go up to the hour right quick. On the hour, we waited for two things. One, we saw a liquidity sweep occur here, and we wanted for that to be confirmed on a high time frame confluence. We had a break of structure that said that liquidity sweep was in fact a liquidity sweep. It filled orders and it was confirmed. From this break of structure, we waited for news to occur. The break of structure was the result of news. We waited on the 30-minute for just to make sure news had its reactions the way we wanted it to. Boom, we got that nice and taken care of. From the break of structure, we went to the 5-minute because we wanted to make sure that was a break of structure, and we did get a break of structure back to the downside. From that, break of structure / liquidity sweep right here. We waited for the next confluence to form. Here, we did not get a break of structure. We did not get a inverse fair value gap. Well, we did get an SMT divergence that said price was going to go higher here. Boom. Because of that, we had that going for us that said price was going to move higher. From that confluence, we waited for fair value gap and breaker block to form on that confluence, that time frame as well. We got both. We moved on to the 1 minute. From here, we looked specifically for, on the 1 minute, closest to most recent price action, inverse fair value gap / break of structure. We entered on the filling of a break of that move here, and we're watching price continue higher now. That is, the bias is that it is going to continue higher. It should continue higher, according to literally everything else. We did not break structure out of this on the higher time frame. 5 minute, 1 hour is the 4 hour in line. 4 hour is not in line yet, but it is getting there. The hour is on an uptrend. The 5 minute is on an uptrend. The minute is on an uptrend. The 4 hour is not, and the daily is in an uptrend. I think we're in an uptrend. The bias, I believe, is a strong one that we're going to sweep this high, and my take profit is going to get hit. This right here is going to get hit. That being the case, I'm going to pause the video now and let it do its thing. I'm going to walk away for like 5 minutes. I'm going to come back and we'll see where it's at. BRB. It appears I did something wrong. It appears I did something wrong. What did I do wrong exactly? Everything up to the point said downtrend. Okay. We had a sweep down here. It was the low of London session. We didn't really do much outside of that. Market open. We had news. Break of structure out of this downtrend. Really, we broke structure beforehand. We were in an uptrend. We had a liquidity sweep up the high. I guess my mistake was thinking that from the liquidity sweep, price would continue higher when liquidity sweeps are actually signs of reversal. From news, this was news candle, by the way, that's what this was. News and the SMT said the SMT would go higher, said the S&P would go higher, not the SMT. NASDAQ kept on the low side, and we wanted NASDAQ is tanking. That was the mistake. Not looking at NASDAQ. We looked at NASDAQ. We knew it was lagging behind, and the bias up until the break of structure was down. We kept with the S&P thinking, okay, break of structure says up to the upside. The idea that the break of structure after the liquidity sweep on a high time frame, in my opinion, was the correct thought. News, that was 9 o'clock. From 9 to 10, we had a break of structure. One break of structure. Are we still in the downtrend? No, we are not. Per the S&P. What about the NASDAQ? The hour NASDAQ, we are still in the downtrend. Huh. Okay. Am I willing to admit my trade idea was wrong? Yes. At the same time, I'm also willing to admit that my idea was right. Per this chart specifically, looking only at this chart and nothing else, this makes sense that this should continue higher. We broke structure and everything on a higher time frame, it should continue higher. Even on the 5-minute, it should continue higher. That being the case, that being said, this trade was also taken off of an S&T divergence. We did not get a break of structure on the 5-minute. Yes. We got a break of structure on the 5-minute, but it was based on this liquidity sweep right here. That this right here hit. It was this move right here that said we'd get to continue higher. The NASDAQ disagreed harshly and said price would actually continue lower. In this case, it was the NASDAQ that was correct. When up until the point, the S&P was lagging behind the NASDAQ. The NASDAQ predicted the future of the S&P. So, my mistake, if I had to guess, without anyone commenting or pointing me in the direction, when an S&T presents itself, look at both NASDAQ, look at both S&P. They predict the future of each other. The steeper the S&T, the more likely that chart is correct, in that the future of the other will follow suit. I'm convinced we're going to get stopped out. We just lost 14 cents. We are down. This right here. Yeah, we're about to get stopped out. So this was... We took 2 trades. We lost 6 cents, got 2 pennies back. We got stopped out. 14 cents there. We are down a total of 18 cents. Which is a problem. That is a problem. Taking a note now. SMTs on the 5 minutes time frame are predict future of the other chart. The steeper they present themselves. Other words, if one chart is two candles that are close in an uptrend that have relative equal wicks, the other steeper reverse. Steeper wicks, the reverse, resulting in the S&T steeper chart will be the predictor of the other. I think that makes the most sense. SMTs on the 5-minute time frame predict the future of the other chart the steeper they present themselves. In other words, if one chart has two candles in an uptrend that have relatively equal high wicks, and the other has steeper wicks in the reverse, resulting in the SMT, the steeper chart will be the predictor of the other. In other words, in the example we have here, we had an SMT. These two candles, these two candles. These two had presented a steeper high setup because, again, we were in an uptrend, right? We broke structure like relatively in here. We were in an uptrend up to the point, right? And it was these two candles that said we had an uptrend. Same story here. Or, I'm sorry. It was these two candles that did not say we were on an uptrend. These two candles were the SMT divergence. These two had a more defined, okay, from this high to here, this is lower. Without breaking structure on this note here, had the same story here. We had an SMT divergence that said the other way around, but it was relatively equal. Meaning, when we looked at this chart here, this was the precursor. This was the predictor for the S&P 500 that price would actually continue lower. As a result of it continuing lower, we got stopped out. I think that was my mistake for the day. We are down. Did I add that up right? We had 8. That should be 18 cents, not 14. I'm going to save this right quick. $0.18. Boom. Save. Hey. That was my mistake, as far as I can tell. That's been very, 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 very disappointing. That's like very disappointing, to be completely honest. I was expecting to have a decent trade day, and it was. I'm just tired of making mistakes that I'm myself am making dumb choices, I guess. The liquidity sweep should have been the first sign of, yeah, we're going down. Also, I need to be looking at this right here. When these candles like this one form, where there are breaks like this, and this occurs, I'm going to make another note. I'm going to make another one. Because that is a note worth taking at the moment. Because I'm tired of falling for it. 18. When news or when news hits or candles separate from typical no. So it's complicated to explain because two candles, right? Normal structure. You have open, close, right? I'm sorry. I did that wrong. It starts like this. Open, close, open, close. These two candles make perfect sense. Why? Because they close and open at the same level. They start and literally bridge a straight line across and then move, close, open, or close, right? Open, close, open, close. It's always a straight line between these two candles. When this occurs, where it goes open, close, straight line, open, close, but here's the stupid thing. Because this closed and we open at a different price point, this is the trip up I'm having. This is the result of something happening within the market that no one has control over except market makers. And it always throws me for a loop. So that's what this note is about. When this occurs, understand that and assume that this closure and this open, or sorry, because yeah, this closes, this opening here, right? Assume that the two of those, the closure of this candle and the open of this candle, are actually on the same price point, and that when this closes below the closure of this, if this closure is below the opening of this, it is a break of structure because this is on a lower point. These two look like they're on different price points, but they're not. This one is on a different price point. That's as good as I can make it out to be, but it's very hard to explain that because it makes a gap. I'm going to erase this. In the event of a price gap, not an fair value gap, assume the following candle after the close of second candle is at a different price point, making a potential break of structure in the event they are opposing candles. I don't know how else to explain that. In the event of a price gap, not a fair value gap, but a price gap, the following candle after the close of the second candle is at a different price point. So, candle 1 in this instance is the candle that makes sense. Candle 2, the result of the price gap, is on the same price point, but the candle following the closure of that second candle is at a different price point. So the closure of this, in the event this occurs, will have resulted in a break of structure there. Because this broke structure here, and we had, that doesn't make any sense either, because we had a break of structure right there saying price would continue higher. And up until that point, we were gold. It was this break of structure here, beyond this low, that said price would continue lower. So, I'm going to do this. I'm going to put a star right there. And I'm going to make a note. I don't even know how to combat that. That's difficult. Dang, we could have made back a ton of stuff right there. See that, chat? Comment section. That's practically barreling through all the confluences. That's actually hunting this down right here. I'm not going to trade again. I'm not going to overtrade. I'm not going to try it. The S&P's not giving a crap. It's sitting right where it is. Looks like the NASDAQ was the one we could have taken a trade on, and it would have been more beneficial to us. NASDAQ is going crazy. How do I put this? Because I want to combat that. I want to combat those gaps. Everything makes sense until those appear, and then it's one of those... It's a question of, how do I do this? How do I use this as a benefit to the general strategy? Because right now, all I see it as is a gap where nothing took place, and an exchange occurred that put price to a different point. And due to it being at a different point, I now have to consider the building blocks that, up until that point, made sense irrelevant. Changing my overall bias and my general judgment on the chart. It throws me for a loop, quite literally. I think this is wrong. I'm gonna do this because I think this is the correct way to say it, and the result of it is very problematic. I'm gonna come up with a solution. I think this is the accurate... Oh, hello. Yeah. I think this is the appropriate response to it. Not to inspire over trading. So, Major note there. In the event of a price gap, to the best of my ability, the description of it is the change of price without it being marked on the chart. Assume the following 3 candles will change trend through a break of structure. If a trade has been entered, meaning you're in a trade, and a gap has occurred during price movement, close the position and reverse the position. Not to overtrade, but to prevent a stop loss from being triggered. What happened exactly? We saw this gap occur. From this gap, we had open closure, new thing here, and everything resumed normal. I'm going to change that number to 5. Because we were above the entry. We were gold up here. I'm sorry. I'm wrong. Because we entered halfway through this candle. This candle presented us with the fair value gap. Boom. And on the 1 minute, the break of structure right there. We entered on the breaker block here. And from this entry, we actually saw price move higher, which was good. We saw the 1 penny we would have gotten come back to us. This makes sense. From this point forward, the thought process was price was going to continue higher. It made sense. We had all the confluences saying price was going to go higher. That being the case, because of the S&T divergence being misread and being thrown for a loop off this gap, problems were made. Mistake was made on this. We were stopped out. In conjunction with the S&T note I made earlier, I still strongly think that, hello, relative equal lows? Nope. I thought that was this low and this low here was making relative equal ones. I was wrong. In conjunction with the notes, though, the S&T divergence reigns true. Right? To use it for the opposite chart. And then that gap is a confluence I'm going to use from here on. If that gap presents itself and immediately after I see an S&T divergence, I'm taking the steeper of the two and applying it to that. Let's go ahead and make that note. We're making a ton of notes this video because I'm learning from this mistake. If an SMT and a gap up here. How do you spell immediately? Immediately. That is completely wrong. Is that how you spell immediately? I'm sure that's wrong. I'm gonna fix that later. In the event SMT and a gap appear immediately after the other, use both as confluence for the other chart to best I put that wrong. Use the SMT as primary confluence. That's price on the other chart will be moving in the direction steeper to prevent fusion. That's the best I could put it as. If an SMT and a gap appear immediately after the other, in other words, in any instance, I have an SMT then a gap, or I have a gap then an SMT. The SMT is to be used as the primary confluence in order to understand that price is going to move in that direction. Because price at that point has now been established, we are moving in this direction. The SMT is to be taken literally as per the note I just made. SMT is on the 5-minute time, number 17, right? Note 17. It's to prevent the confusion after a gap is made. So the end result is, I'm still using the strategy TJR was teaching. And I'm not getting confused by a gap that appears out the blue. There is no confusion. I have that gap, and S&T was made. Regardless of what that gap does, because I can see the SMT being made, I can see where price is going to go. Then the result is price moves in that direction. It's the confluences from that S&T that matter. The S&T says, okay, we're going to go in this direction for the other chart. On that other chart, per the S&T, we then identify from those two candles, fair value gap, breaker block, order block, equilibrium, and then on the 1 minute, break of structure confirming that continuation, or an inverse fair value gap saying we're moving lower. Same thing on the 1 minute. Break structure, inverse fair value gap, whatever. As soon as we see it move up, buy, or sell, whatever, watch it move. In the event I'm wrong, I'm sure someone will let me know in the comments. If not, I'll figure it out one way or another. Regardless, I hope you guys enjoyed today's video. I understand I lost another 18 cents, and on a higher amount of money being placed into trade, that's not a very good thing. Because on the dollar, that's what? On the dollar, that's still 18 cents. On 10, that's $1.80. On $100, that's $18. See where I'm going with that? Add a zero. The more I put in, that is the thing. Yeah. So, that being the case, I have taken notes. I have learned a little bit, and because of that, I'm a better trader now. I can't trade Wednesday, Thursday, or Friday due to NFP folders as well as 4th of July. I hope you guys enjoy your 4th of July too. I'll be seeing you guys, I think, next Monday. Let me see what news has installed. We have that right. Ooh, look. I saw that. That was like bold. So tomorrow, non-farm. Thursday, non-farm. Friday, bank holiday. Not Saturday, not Sunday. Monday, we have no news, so I should see you Monday. Tuesday, we have no news. I should see you Tuesday. Can't trade Wednesday. I can trade Thursday. We have one red folder and GBP on Friday, so I should trade Friday as well. I'll see you guys Monday next week. I hope you guys enjoy your 4th of July. I know I'm going to. Yeah. I'll see you guys in the next one. Peace.